Hi, welcome to the Market Alert for Wednesday, the 25th of July 2018. So we're starting off with the pound daily chart. Yesterday you can see that the market's moving higher back through the 76% retracement and heading for the 20-bar moving average, also sitting at the 131.50 there at the moment. You can see if we come up to here and then get an extension and just draw this out, you can see that the 131.57 is a resistance area for this market. So internally for yesterday, you can see the market trading down to the S1. Market springs off this yesterday at 8.15, and then once we managed to get a convincing move above the 200 bar, you can see how the market comes back to the psychological levels and then keeps going back through that 200 bar and remains above it and drives higher. Not a great move by any means. The whole range for yesterday, if we go from the low to the high, was ballpark 87 points there. And overnight, just get the move button activated there. We're more or less sideways again, so stuck at that 131.50 level at the moment, but above the DP and yesterday's close at the moment, and also the 200 bar moving average. Watch yesterday's high because again you've got this situation here, 131.57, which is important to take note of. It's become a double top resistance there for the pound, so keep that one in mind. News for today, I'd say going into the summer, tend to quiet down on the news front, and the only thing we've got of any note is the crude oil inventories, and again that's really shouldn't be high impact news now. That became it when the oil price dropped down to around $30 a barrel, but since then really it doesn't have much of an impact on the market. And then in the Dow, we'll go to the daily chart. I'd like to look at the bigger picture. That's the starting point for any trading day. Yesterday we can see the market moved higher. We still got this problem, there is no volume in this market. This market is just being marked up, and again 25.405 is the next upside target, of course taking out yesterday's high en route if the market is going to move higher there as well. For some unknown reason it won't mark up, so let's just have a bit of a clear out here. Might be too many lines on the chart, so let's see if we can pick off the high now. That's what we're after, 25.287. As far as the bigger picture is concerned in this market, let's just have a look at that, just to see where we are and where things, or where prices are trading in connection with this. So this is the all-time high over here, which is going to be, there we go. I'm not saying the market's going back to it, but it's interesting to see where you are in the bigger picture. Very, very important. I mean, we've got a high over here as well that would need to be taken out. So they're going to do the best to try and keep this market on the highs, or even to bring it up to the all-time highs before October, when the US government has to borrow $1 trillion to keep the government afloat, and also they start the repayment and offloading of the QE money that's on the Federal Reserve balance sheet. That's going to be going out at $50 billion a month. One major problem, they've been increasing interest rates since December 15 to this point, from 0.5 I think it was, and now we're sitting around 2% for the Fed funds rate. And that's bad news. Actually increasing interest rates when you're trying to offload $4 trillion is not the brightest of things to do. And I firmly believe when we get to October and they start to unload this $50 billion a month of QE to get the debt off the Fed's balance sheet, that's when it's going to hit the fan. And the increase in interest rates is perfect, really, because it gives them some leeway to go back down to 0.5% when it does all start to fall apart. So this is just an exercise in getting the market back up as high as they can, so when it does drop they will have some sort of leeway, and also allows the elite to get out of the market and also bring in the sheep to offload as well. So very interesting going forward, certainly around October. And in Bitcoin, switched from the candles to the normal price bars here because they're easier for me. They're a lot easier to read and see. And we've got Bitcoin up again yesterday, heading towards that 200 bar moving average, which is going to be crucial. 86.10, currently trading at 8430. So I'll be watching this area here very keenly to see if the market can hold above that 200 bar moving average. Without this marked upon the chart, you wouldn't know where you were. Now we can see exactly where we are because we've got this resistance over to the left. We could go a bit higher as far as here is concerned, but there's certainly overbought conditions in this market. Whether you were to use stochastics, you can see there that the market's overbought as prices have moved higher. The other thing as well, I'll just turn this off, this volume here is significant, and this is not necessarily all buying. This can be a sort of a blow-off situation as well. And again, watch the area of the 200 bar moving averages. Design, you know, the pros are very good at selling as the market moves up, as new buyers come into the market, which is why you get this very high volume. Here you can see that we've got the sort of takeoff and then just moving higher, but and also on Monday, but yesterday significant move there. And also, just to remove these arrows and point this out to you, the range of this bar isn't too dissimilar from this one, and then the volume is a lot less there. So again, these sort of clues that are left behind are an indicator of what could potentially look like a lot of buying, which in turn could be selling as well. So we'll see what happens there. Right, that will do it for this one. If there's anything else to report during today, I will let you know, but I would expect things to remain fairly quiet, with the school hole still being just the start of it at the moment. So we'll see. Okay, that's it. As ever, thanks for watching. See you in the next